Good evening and welcome to 13th episode of the Rahul Nair Finance Show. You're listening to the daily Dealroom, from startups to stock markets, where we decode the business buzz of the day. Crisp, clear, and to the point.
Today is 28th July 2025. Before we begin, here's a quick disclaimer. This podcast is for educational purposes only. It is not a buy or sell recommendation. Always consult a financial advisor before making investment decisions.
Let's start with our first segment, the market wrap closing bell. Let's kick things off with how the markets wrapped up today. The mood was grumpy this Monday, rattled by weak results from Kotak and some U.S. trade drama. But after a midday break, chai anyone? Stability returned and things settled down. Nifty 50 closed down 0.63%. at 2450680. Sensex ended lower by 0.70% at 8,891. Bank Nifty fell 0.79% to close at 56,084. Nifty Midcap declined 0.84%, finishing at 57,519. Nifty Smallcap slid 1.26% to 18,064. On the sectoral front, we saw a tug of war. Gainers, Nifty Pharma and Nifty FMCG both climbed 0.43%. Losers, Nifty Realty plunged 4.07%, and Nifty Media was down 2.70%. And speaking of the broader weekly trend, July's been tough. The Indian equity market logged its longest losing streak in 2025, 4 straight weeks. Sensex finished last week down 0.36% at 81,463.09, while Nifty 50 dropped 0.52%, ending at 24,837. Small caps took the brunt, tumbling 2.5%, with big losers like Indian Energy Exchange and SEBI falling double digits. But there were a few pops. Infobeans Technologies and SML Isuzu surged 20 to 40%. In mid-caps, losers outnumbered gainers, with 3M India and Dixon Technologies among the bright spots. Sectoral pain points for the week included Nifty Media, minus 5.7%, Nifty Realty, minus 5%, Nifty IT, minus 4%, Oil and Gas, FMCG, minus 3.5% each, but banking and pharma held up relatively better. FIIs offloaded 13,552.91 crore for the fourth week straight, while DIIs kept buying, notching their 14th consecutive week of net purchases at 17,932.45 crore. Major market value losers: Reliance Industries, ITC, TCS, Infosys. Gainers: Eternal, HDFC Bank, ICICI Bank.
Let's continue with our second segment, company news, earnings, and announcements. There's a lot happening on the corporate grapevine. First up, Zubin Modi has stepped down as CHRO of IndusInd Bank, citing the pursuit of new opportunities. The biggest headline is from the IT giant. TCS is planning the largest layoff in its history, cutting around 12,000 jobs, about 2% of its global workforce over FY 2026. This move is not about AI replacing workers. TCS's CEO stressed it's a skill mismatch challenge, not automation. Despite upskilling 550,000 staff in basic AI and over 100,000 in advanced AI, a chunk of employees, mainly mid and senior level, struggled to transition to the company's new agile, product-focused model. The company will support them with severance, extended health coverage, mental health counseling, and outplacement. The layoffs face pushback from IT unions, urging employees not to resign under pressure and to seek proper compensation. TCS is keen to manage the transition without client disruptions and continues to hire for roles aligned with new age tech and markets.
Let's continue with our third segment, gold, currency, and global news. Gold trading at 98,088 rupees. On the currency side, the rupee slid for the third week, dropping 37 paise to close at 86.52 per USD. On the international front, Alphabet stock has had an explosive rally, adding over $1 trillion in value since early 2023, powered by strong AI investments and a blowout Q2 earnings result. It's made CEO Sundar Pichai a billionaire with a net worth of $1.1 billion.
Let's continue with our fourth segment. IPO Radar IPO fever is heating up. Amagi, the media-focused SaaS unicorn, has filed its DRHP with SEBI. The IPO mix, 1,020 Cr in fresh shares, plus an OFS of up to 3.41 Cr shares. This comes soon after Amagi went public as an entity, marking a major milestone for SaaS in India. PhysicsWallah is set to become India's first edtech unicorn to list. SEBI approval is in. The IPO aims to raise about 4,600 Cr, nearly $533 million, from a blend of new shares and investor OFS. Despite posting a loss of 375 Cr on 1,940 Cr revenue in FY24, the company is touting a robust offline push and a pre-IPO valuation of $2.8 billion. Moves include a new CMO, new independent directors, and converting to a public company. Early backers like Lightspeed and Westbridge may partially exit, a textbook investor exit move. This IPO is a landmark, considering the current edtech funding crunch.
Let's continue with our fifth segment, Private Market Pulse. Moving to the unlisted space, Lenskart has received shareholder nod for its 2,150,000 Cr IPO. The reveal includes a fresh ESOP plan and details on co-founder pay. And while startup funding's been tepid recently, last week saw a brisk rebound. Indian startups collectively raised $134.4 million, up 69% over the previous week's $79.7 million. Messaging unicorn, Gupshup, topped with a $60 million raise.
Let's continue with our sixth segment, Industry Insight. On the fundraising side, the market's showing resilience in the face of macro challenges. Strong DII inflows, selective sector rallies, and a healthy IPO pipeline underscore investor confidence, even as global uncertainties linger. That wraps up today's episode of the Rahul Nair Finance Show, brought to you under our daily series, The Daily Dealroom, from startups to stock markets. If you liked this episode, don't forget to like, subscribe, and share with your friends, colleagues, or anyone who's into business and investing.
We'll catch you tomorrow with more updates. Until then, stay curious, stay invested.